Here's a daily review and our mindset of today's trading day. Thursday, December 4th, we're trading SPY, the S&P 500. After the initial drop in the morning that tested the 5-day moving average, we're looking for it to breach down below the 5-day moving average to see if she's going to make a long dump down. And you can see the price action as we move into the day, and about there 10:30 Eastern time, you see the bears with intention start making their move. They broke under the 5-day moving average. That was a really nice trade to take. We could see magenta algorithms building liquidity, bearish liquidity, and the bears were able to breach the 5-day moving average. Then right away you see an immediate bounce from the bulls. Strong bullish candles matched the down move from the bears. And this is about 10:25, and you could see the volume right here. Specifically down here you see the bearish volume on the volume bars. These are 1 minute. This is a 1 minute chart, so each candle represents 1 minute of time. The bulls have some strong volume, and it's at that point that I made a note to myself. 10:40 a.m. Never call for a reversal. So people who are looking for price to continue to go back down after the initial drop, never call for a reversal when you see this volume of buyers. The buyers have to lose steam before you could consider another short. This was also a good place to take a winning long position when you see this type of volume. This is buyers showing the intention. So this changes our bias from shorts to long positions. And you could see the bulls started taking over. And it was here at around 11:18 that we could see the bears try to make another move and breach the 5-day moving average again. They couldn't. You see the bullish buying volume. This shows intention. This shows you that bulls are defending this range, this area right here. I made another note at 11:18 a.m. The bulls must lose power before the bears can take it down. We've seen the bullish volume. They're defending this pink level very well. This helps. Once you see the buyers volume, you know that there's buyers at this level. So this helps you, keeps you putting things in perspective that this price is not going to dump just yet. You have to soak up all the buyers that are here. And these large volume bars shows there's large transactions. That means there's buyers with money that are defending this range. So they're not going to let it go down too easy without a fight. And that's when we started ranging and essentially building liquidity. That's what happens now. The bears aren't able to push it back down. The bulls are defending that level. And this creates the wedge. The buyers and sellers basically are at equilibrium, are at balance. Price is really going nowhere. And I made another note. We're basically in a wedge, in a consolidation. And if you notice about this wedge, the buyers are buying every time. They're buying at a little higher level, they're buying at a higher price. And the bears, they're evenly defending this same level along this red line. So the bears are defending the level at a consistent level, and the bulls are having to buy at a higher level every step of the way. This is when we ask ourselves, when do we stop buying something as the price continues to go up? Eventually, there's going to come a time when you just are not going to buy a product if the price continues to rise. This is what creates this wedge and an imbalance. We're looking for price to move out of this wedge, and that's what we're trading. We're trading the imbalances. So we prepare for the setup, and you see the wedge continuing, creates that imbalance, and we get towards 130, 145, right around 2 o'clock, where you see the bears have defended this level. The bulls have no continuation. They tried, but they got rejected. So there was no bullish continuation. Then you see the bulls essentially lose power, lose steam, and they give up right here. Now this begins the bullish move, and there's the break right there of the wedge. The bears have now broken the wedge with volume, showing intention. And from that point at 215, you could see how strong the bears broke out of that wedge, initially with the teal algorithm, and then price went into a steeper selling algorithm, the blue, more precision algorithm. So price was selling at this gradient in teal, and it went into a steeper trajectory with, you could see the volume, huge seller's volume, broke out of that teal selling algorithm into a steeper trajectory, bluish algorithm. This is where we were able to take advantage of the trade. Our entry was right after the wedge was broken, confirmation with the volume, which tells us that there is intention. The big boys are making a move. This is where we want to enter the trade. We protect our trade and exit the trade once price starts to reverse and the bulls begin taking over. And you can see for the rest of the day, that was the one great move of the day. And again, right under the 5-day moving average, the bulls reclaimed the 5-day moving average with volume. This shows their intention. They're defending this level, they're defending this range. We got our one great trade of the day. Anybody that was looking for reversal and sees this volume, bullish volume, can take advantage of a long trade, a bullish trade. And the day finished out chopping, and the bulls ended up finishing up back at 684.55. There's a review of the day's trade, the wedge, how we look at liquidity. We're looking at structure and the algorithms, letting the algorithms guide us, and volume, and how important volume is to show you the buyer's intention as well as the seller's intention.